This scam sold health insurance coverage that looked real, collected payments, and left victims unprotected when they needed care. Across the US, UK, Europe, and parts of Asia, people were offered low-cost plans with immediate benefits and fast approval. The offers promised doctor visits, prescriptions, and hospital coverage at reduced prices. Victims paid monthly premiums or upfront fees believing they were fully insured. But when medical treatment was needed, the coverage did not exist or did not apply. In reported cases, individuals were left with thousands in unexpected medical bills. Investigations revealed losses reaching hundreds of millions, with deceptive companies fined and shut down by regulators. Some operations used real company branding to appear legitimate. What made this scam effective was timing. It targeted people actively searching for affordable health care. By the late 2010s and into the early 2020s, healthcare costs continued to rise across the US, UK, Europe, and parts of Asia. Many individuals began searching for affordable alternatives to traditional insurance plans. Online marketplaces and comparison sites made it easier to explore different coverage options. At the same time, insurance policies became more complex, with varying terms, exclusions, and eligibility rules. This created confusion about what was actually covered under different plans. In several reported cases across the US and Europe, consumers relied on third-party agents for guidance. The demand for low-cost, quick approval plans increased significantly during this period. Personal data from prior inquiries and applications became valuable for targeted outreach. This environment allowed fake coverage to be presented as a legitimate solution to a real problem. The scam often began with online ads, comparison sites, or direct calls offering affordable health coverage. Plans were presented as limited-time offers with immediate activation. Agents claimed partnerships with well-known insurers or healthcare networks. Victims were told they qualified for special rates or exclusive programs. In several cases across the US and Europe, communication moved quickly to enrollment. Personal and financial details were collected as part of the application process. Payments were set up as monthly premiums or one-time enrollment fees. At this stage, the process felt structured and the coverage appeared legitimate. After enrollment, the scam shifted into ongoing premium collection and limited documentation. Victims received policy documents that appeared detailed but contained critical exclusions. Some plans were discount programs rather than actual insurance coverage. When medical services were used, claims were denied or only partially covered. Providers often had no record of the policy or rejected the coverage entirely. In several reports, victims were asked to pay out of pocket despite having active plans. Communication from the provider became delayed or non-responsive during claims. Refund requests or cancellations were difficult to process or ignored. The system converted trust into recurring payments without delivering real protection. As demand for affordable coverage increased, the scam expanded across regions and platforms. Multiple brands promoted similar plans with slight variations in pricing and benefits. In reports from the US, UK, and Europe, identical coverage structures appeared under different names. Lead generation systems collected inquiries and distributed them to sales networks. Affiliate marketing and ads increased visibility during enrollment periods. Some operations used real insurer names alongside misleading disclaimers. Call centers handled large volumes of enrollments using standardized scripts. What appeared as separate providers was often a coordinated system targeting the same demand. Certain patterns began to repeat across cases that later proved to be fraudulent coverage. Plans emphasized low cost but provided limited clarity on actual benefits. Policy documents contained exclusions that were difficult to interpret at first glance. Agents avoided detailed explanations about network providers or claims processes. Payments were collected before full verification of coverage details. In several cases, victims discovered the plan was a discount program rather than insurance. Customer support became unresponsive when claims were submitted. Regulators flagged repeated complaints tied to misleading coverage descriptions. The issue was that these signs were often recognized only when medical care was needed. As complaints increased, regulators began connecting cases across multiple companies and regions. The Federal Trade Commission and agencies in Europe investigated firms selling misleading health coverage. Investigators identified call centers using scripts that overstated benefits and approval status. Financial records showed recurring premium payments collected without corresponding insurance backing. In several cases, companies were shut down and executives faced enforcement actions for deceptive practices. Operations were often run through layered business names to avoid detection. Some networks were linked to cross-border setups handling sales and payment processing. Consumer protection bodies issued warnings about non-compliant health plans and fake coverage schemes. Estimated losses reached hundreds of millions across affected regions. The investigation confirmed a system built on misrepresentation, complexity, and recurring payments. This scam showed how complexity in healthcare systems creates space for deception. When coverage details are difficult to understand, simplified promises become more convincing. Victims were not just buying insurance, they were buying certainty and access to care. The system allowed intermediaries to present partial or misleading information as full coverage. What failed was not demand for insurance, but clarity around what was being sold. Even careful buyers struggled to distinguish between real coverage and limited programs. Experts now emphasize verifying providers, reading policy terms, and confirming network acceptance. The broader lesson is clear. When protection is promised, verification must come before payment.